Good morning, good afternoon, good evening. My name is Jayden Doye, CPA, your favorite CPA, and today I am doing a webinar on the employer retention tax credit. Now, before I get into today's webinar, I want to let you guys know a little disclaimer. Prestige Accounting Solutions believes the analysis and comments that follow are correct. However, with all the guidance in connection with CARES Act and Consolidated Appropriations Act 2021, also known as the stimulus bill, it continues to evolve. This presentation is for general information purposes only. It is not intended to constitute as legal advice. As necessary and appropriate, you should consult with the applicable professionals with respect to the specific situation on any specific matter. This deck is based off IRS information from December 28th, 2020. All right, now that we got that out the way, let's first take a trip back down memory lane. So you guys remember the PPP program? So there has been some updates this year regarding the PPP and employee retention tax credits. So today we're going to talk about PPP rounds 1 and 2, the CARES Act tax credit. We're going to talk about eligibility and next steps. All right. So did you receive PPP funds round 1? Most banks have already submitted for their clients to complete the application for forgiveness. So if you haven't already, you might want to check with your banker if you haven't been prompted to do so already. In addition to that, previously you were unable to take advantage of the employee retention tax credit if you took out a PPP loan. Now that's not the case. Let's talk about the Payroll Protection Program Round 2, also known as PPP. This was announced as part of the Consolidated Appropriations Act of 2021 and was available through March 31st of 2021. Now, at this point, getting access to this has closed, so I just want you guys to see some of the facts regarding that, and now we can move on to the next slide. Let's talk briefly about the history of the CARES Act. So the history starts with round 1 of the PPP, which was introduced with the CARES Act of 2020. All of these efforts are used to help businesses retain employees. They want to keep jobs out there. They want to keep people employed so that they are able to pay their bills and do not have to go on unemployment. Okay. Now, the ERTC is a refundable tax credit against certain federal employment tax obligations. Before, as I stated, those who received PPP loans were not eligible for the employee retention tax credit. The Consolidated Appropriations Act of 2021 was signed on December 27th, 2020. Now, PPP borrowers are eligible for the ERTC if they meet certain criteria. Extended applicability of the ERTC to wages paid through June 30th, 2021. Now, let's talk about the period of credit availability. The qualified wages are for periods that happen after March 2020, March 12th, 2020, and before January 1st, 2021 for the 2020 year. See how easy it is to get tongue-tied saying that? However, for the 2021 year, we're talking about wages that happen from January 1st, 2021 through June 30th. So it ends right here on July 1st, 2021. So Q1 and Q2 of 2021, basically. Now let's talk about the available credit. So in 2020, you could, the amount of the credit was based off of 50% of qualified wages. For 2021, this changes a bit because now with the new stimulus bill, it's 70% of qualified wages with a maximum of 7K per employee per quarter. So previously it was 5K per employee, and in 2021 it's 7K per employee per quarter. So when you guys hear people talk about you can get a $14,000 tax credit per employee, this is what they're talking about. So in an ideal world, the absolute maximum you could get is 19,000 per employee if we include 5,000 from 2020. Okay. All right. So here's a calculation example. Let's say you had one employee at 12,000 in quarterly wages. 12,000 minus 10,000, which is the maximum. We can only use 10,000 because 10,000 is the maximum qualifying wage amount. We multiply that times 50%, the credit eligible credit percentage, and that's 5,000. Okay, 5,000 and the employee retention credit minus employment taxes equals a refund in your a refund amount if the credit actually exceeds the employment taxes. So if the amount is lower than employment taxes, then all it will do is lower the amount due if there is an amount due, if it wasn't prepaid. However, if you have already paid your payroll taxes in full and this 5,000 amount is higher, then you'll get a refund. And you can have that go towards the next quarter, or you can have them send you a check or put it in a bank account. So if you had 10 employees with the wages of at least 10K per quarter, then the credit would be 50,000 in this example. Now let's do an example for 2021. Again, we're going to start with the max qualifying wage. This is the same same business with one employee. Now we're multiplying that 10,000 times 70% versus the 50%, creating a employee retention tax credit of $7,000. So for Q1, if applicable, they would get 7,000, and for Q2, they would also get 7. If this business had 10 employees, then the credit would be 140,000. Let's talk about eligibility. For any quarter in 2020, if gross receipts are less than 50% of gross receipts of the same quarter in 2019, or business operations were either fully or partially suspended by a COVID-19 government order, that constitutes eligibility for 2020. For 2021, stimulus bill expanded eligibility by reducing the required quarterly gross receipts drop from 50% to 20% in 2021 as you compare it to a quarter in 2019. It also provides a safe harbor allowing employers to use prior quarter gross receipts to determine eligibility. So for example, you could use Q1 of 2021 for the first quarter of 2021 to confirm if you're eligible for that quarter. You would compare Q4 of 2020 to Q4 of 2019 to constitute your eligibility for the first quarter of 2021. Now remember, we can only get this credit for Q1 and Q2 of 2021. Okay. Now, the eligibility is different for small employees versus large employers. And as, for 2021, a company with 100 or less employees is a small employer and is eligible for the credit, even if the employee is providing services. For 2021, it increases the threshold to businesses with 500 or fewer employees, even if they're providing services. Now, you guys are probably asking, how do we claim this credit? Well, it's rather easy. Well, for me, because I've been doing this for years. All you have to do is file Form 941X. So, as many of you know, quarterly payroll reports are submitted to the IRS on Form 941. If you need to make an amendment, you have to file Form 941X. Now, I will say this is not do it yourself. This is not something you try on your own, okay? This is something that you want to make sure you first talk to your payroll provider first. And then if they are unable to help you, then you talk to your CPA. Because if you fill this paper out incorrectly, there may be great delays, and they might even process it and then come back and say, oops, we made a mistake. We're going to need that money back. I've seen that as well. Now, when it comes to payroll tax returns, I've been doing payroll tax returns for a very long time. And as long as I've known, the processing is not very timely. It's actually quite a long process until they actually review it. Most of the times I've seen it where the quickest I've seen them get back to us is 90 days. And that was before COVID. So now we're in a pandemic. They're severely understaffed. I would assume that if there's a mistake on this, it may take longer than 6 to 9 months to get it rectified. So please make sure you are working with a qualified professional to get this done. The first step is to make sure that you qualify, either based off of the gross receipt qualification or determine if and when the business was partially or fully suspended by government orders. Now, this alternative test has been interpreted very broadly and can easily be met by the food and beverage establishments. So restaurants have a greater advantage in this case. Restaurants were hit very bad by this pandemic, and I've noticed that the IRS and the government are doing a lot to try to revitalize the idea of Americans going back to restaurants. Here's another example of a review to figure out the gross receipts. Based off of the gross receipts, if you qualify, I'll take another second for you guys to take a look at this. All right, moving on. Key takeaways. You can get both the Employee Retention Tax Credit and the PPP Round 2. You want to make sure that when you're determining qualifications, make sure that you're looking at the right quarters when you're looking at your gross receipts. If you don't meet those criteria, a facts and circumstances analysis is needed to illustrate that you can qualify based on the government order impact. Detailed payroll analysis to determine wages eligible for ERTC, which is gross wages less PPP funds wages less any sick pay paid by the Fed. Planning is critical if you're getting PPP Round 2 so you can receive maximum forgiveness and fully utilize the ERTC. And if you believe that you are eligible and you do not have a qualified tax professional to help you through this process, feel free to give our office a call. And if you have any questions, my contact information will be in the description of this video. Feel free to give us a call or shoot us over an email. Hope you found this video to be valuable.